ANZ rolled out the big numbers today, the first of the big four to post interim results. The bank reached a record half-year profit of $2.7 billion, largely due to falling bad debts and increased institutional earnings. But as credit growth stalls, ANZ's boss is warning of big challenges ahead. Here's Emily Stewart.
The smiles signalled the news was good.
I thought it was a solid result. It was exactly in line with expectations.
The top line outcome here is it's a record interim for the bank. By any measure, that's a great outcome.
ANZ has posted a first-half statutory profit of almost $2.7 billion, up almost 40% on the same time a year ago.
Largely driven off some cost efficiencies, the resurgence of ANZ's institutional bank, and reasonable performance in their retail operations.
Chief Executive Mike Smith says the effects of the global financial crisis have largely washed through the market.
There's still costs in terms of the wholesale funding that we have in the books that were written during the crisis, which doesn't mature until 2013, 2014.
The banking industry is facing some tough challenges, including slow lending growth, new regulations and the high cost of funding. And with ANZ leading the push into Asia, banking analyst Paul Dowling says the high Australian dollar has softened the results.
Business volumes outside the Aussie dollar environment are growing, and that's had a very much a muting effect on this result.
But the bank says it's well positioned for the second half.
We're actually seeing a continued demand for credit, although it's at much lower levels than it was pre-crisis.
Shareholders will receive an interim dividend of 64 cents a share.